They don't realize how easy TradFi has made investing for people. It is very, very user-friendly. Bitcoin is nowhere near there. Bitcoin's real power as being censorship resistant isn't that useful in the US. Debasement hedge more useful. I did say ETF investors will be stickier than people think. It went down 50%. The fact that only about 9% of people left, so 91% stayed, that was as bad as it got. Net inflows minus outflows, that number is the truth. Bitcoin ETFs make up 1% of all ETF assets, but ETFs own about 6-7% of all the Bitcoin already. And so these two worlds are sort of colliding because of the ETF. And I've been in the middle of it, and I've been fascinated by seeing the sort of crypto world try to understand TradFi and TradFi understand crypto. So it's part of my coverage area. And it's one of the fastest growing, honestly, the Bitcoin ETFs were the fastest growing area. And so, it's been a rough 6 months, that's for sure, but better last month. But this is, I think, what you'd expect with Bitcoin. It's a little bit like a roller coaster.
And I guess, for people that don't understand that, what is the writing on the wall right now when you say those numbers about 1% and 7%?
Yeah, I think the general takeaway I tell people, it's because the Bitcoin investors, they're just always anxious, like permanently anxious. TradFi is a little more chill, and they know they have so much firepower, but just the fact that they looked at this asset and said, you know what, let's adopt it. Let's put it in our pipes. Let's give our wholesalers products to sell. I can't overstate how big of a deal that is. And then a couple weeks ago, Morgan Stanley launched an ETF. Up until then, it had been asset managers who are big, but this is the first bank, and it's a wirehouse bank. They're very conservative, and they have $7 trillion in advisory assets. So there's Morgan Stanley advisors, and they're like the gatekeepers of all the boomer money. So the fact that they launched an ETF, again, it took in a couple $100 million, but you gotta be patient. These things are major events that will take years to play out. So I think just sit back, relax, and know that at least you're in this large world, in an ETF, which is the preferred vehicle to all of these big assets that sit over here in traditional finance. They like ETFs. Bitcoin is now in that. So you're where the fish are biting. It just won't happen overnight, because remember, all these other investors, they like stocks too, they like bonds, they like income ETFs. There's a lot of competition out there, but it'll just make its way into portfolios over time. And so I'm not a price analyst. I don't really know what will happen with the price, but generally speaking, if you have it available to more people, and people like Larry Fink and Morgan Stanley thinks it's a real asset, that over time, if there's no new supply really, that should be pretty good for price. We'll see. But I just think the main takeaway is it is mainstream now. It has been declared an actual real asset class by the biggest Wall Street and asset managers. And that's huge, and that's kind of like all you need to know from this angle. Most of the selling has been from individuals, and the calls coming from the inside of the house that ETFs have been mostly buyers, and the companies have been buyers, and even government. So this sell-off has been largely individual driven, but over time, I think maybe the individuals are taking profits from owning it earlier. And if more people buy it through the ETF, this should be good, we'll see. But again, I would not overthink it.
Did that surprise you that ETF buyers were more sticky than maybe people thought they were going to be?
It didn't surprise me. It surprised me how sticky they were, because there have been a couple 20% drawdowns and none of the money left. And that was well, it's only 20. Still, that's a lot. I did say ETF investors will be stickier than people think, because some people thought that, as soon as there's a sell-off, all these boomers are going to run away. But I've seen them in other asset classes. In 2020, stocks went down 18%, and equity ETFs took in 400 billion. So these ETF investors are smart, and they understand investing, and they understand behavior. And the Bitcoin ETFs are probably 1 or 2% of the portfolio. And stocks did pretty well. So I wasn't totally surprised that people could withstand it. However, cover to cover, it went down 50%. That is pretty gnarly. That is way worse than 2008 in stocks, where it was 37%. So the fact that only about 9% of people left, so 91% stayed, that was as bad as it got. And now they've already come back in. So Now you're looking at only like we're only 3% away from the peak of the cumulative net flow number, which is 62 billion. So it went up and up and up and up. It hit 62 billion of cumulative net flows lifetime. Then when the sell-off came, it went down to like 53 billion, but now it's up to 60. So then that's the number to watch. So it's almost about to peak through and create new high watermark in the cumulative net inflow number. That's the hardest number to get in ETFs because that's net inflows minus outflows. It's hard. It's the truth. That number is the truth. So the fact that you're getting almost back to the high watermark of 62 billion is amazing because it's important. Every asset class has bad years, bad stretches. The key is to not lose much money when that happens. That way the hole you have to dig out of isn't that bad. This is a pretty small hole. You're in good shape. And these ETF investors are probably sold the Bitcoin from these wholesalers, not like get rich quick. It's probably sold to them as this is a debasement hedge. You should probably hold it for 4 or 5 years because it goes through these cycles. And if you're worried about the money, government printing more money and your dollars are worth less, this is something that will play out. And that is a very long-term story. So I would give the wholesalers, the ETF companies credit because they're obviously kind of selling it the right way. But certainly the boomers who buy this stuff are less anxious because it's only 1 or 2%. The people I deal with online are like really all in or largely in. And I think that's why they get anxious. This is like their whole investment. And so I get it. But there's a disconnect between, I think, how regular people feel at 1% versus how a Bitcoiner feels at like 80% of their portfolio or whatever they have.
I mean, you mentioned that you're dealing with these guys online, the Bitcoin community. How is that? Like, you were in traditional finance for so long, and now you're in this, some would say pretty chaos industry. You're amongst it, you're very active in the community, you're dealing with these Bitcoiners. How do you find that, dealing with those guys day to day?
I tend to enjoy it, believe it or not. The Bitcoin ETF, I remember when it launched, the day before it came out, somebody hacked the SEC's account. The whole time it's had this inmates taking over the asylum field. And I don't know, there's something kind of interesting about that. The culture, the age, it was again like these two cultures colliding through the ETF, and I've been enjoying it. And I moved around a lot as a child. And so I'm used to going in different environments. It's like natural for me. So I like ETFs for that reason. It sends you all over. It sends you to institutions, advisors, Bitcoin, and then to retail and to all different asset classes. Talking to somebody about like a very serious, smart beta product or a currency hedge product. It's a little different, but ETFs, like Bitcoin, they're for everybody. And so I've enjoyed Bitcoin. I feel like it leans younger, leans more memey. They're funny, they're self-deprecating. And I think it's a fun crowd, and I have enjoyed my time. That's why I've spent so much time here and sort of like been happy to cover it. I'd say if you took like 10 fund analysts, maybe half are just not that interested. I don't care. You gotta kind of have to follow what feels cool and fun for you. And for me, this has been interesting and I've learned a lot. And I spent the past year on a book project about this collision of these worlds through the ETF. And the more I learn about Bitcoin and how it was started and how it grew and how it came back from like multiple 70% drawdowns, I gain more respect for it. It's more serious and more legitimate than some people think. And the book is all about that. The book is like, look, forget what you know. Take a fresh look at it because it's coming to your 401k. It's not going away. And maybe it can help you, maybe not. But like, look at the pros and cons and make an educated decision, not one based on something you read in the news from like 2017.
What's the biggest misconception that Bitcoiners have towards ETF-driven demand at the moment?
I think the biggest underestimation is desisting in general, whether it's crypto or Bitcoin. TradFi is more lean and mean than Bitcoiners think. Even though you're like, we do the blockchain, we're intermediaries, it's just like peer-to-peer, and then like tokenization is like better than the banking system, easy. If you want me to go get Bitcoin right now, when I did this, I got to log on something, get it like a Ledger wallet, then I got to go to some like app, then I got to get my bank money to buy the Bitcoin. That's 1.5% for a newbie. I'm not like a rich person. That's a lot. I'm used to paying 1 basis point, 0.01% to buy any stock or ETF, maybe 2. So 150 is crazy. That's one. Number 2, it took a couple hours to get the wallet transferred. Do I have it? What does the address mean? That's a crazy number. How do I put it in here? Now this thing, where can I send this? I had to have my colleague James walk me through it, and it was still cumbersome. They don't realize how easy TradFi has made investing for people. It's as easy as ordering a McDonald's or fantasy football or a Dunkin' Donuts app. It is very, very user-friendly. Bitcoin is nowhere near there. And Bitcoin and these exchanges are expensive in the transaction fees. So they underrate how competitive TradFi has been over the years. They're very low fee, they're very user-friendly, and that's why I say the Bitcoin plus TradFi is an explosive combination. Because it's not just like TradFi gets Bitcoin, Bitcoin gets TradFi. So it's a synergistic situation. TradFi underrates Bitcoin and how legitimate and interesting the technology is, and the scarcity and all that stuff is, and the censorship resistant. It's really hard to pull off what it did. Bitcoin underestimates how lean and mean and well-managed TradFi is for like regular people.
I mean, we've made great progress with TradFi and Bitcoin over the years, but is there still certain factors that TradFi is hesitant about Bitcoin?
Yeah, the volatility. You know, I think most of these people in TradFi go to college and they get what's called a CFA. That's like a degree. And the CFA, you learn that like good investments have cash flows. Bitcoin doesn't have a cash flow. So they tend to come out leaning a little negative towards Bitcoin and gold. And that's one big strike. So it's hard for a lot of people to get into it because the money doesn't work for you. Like with stocks, people get up every day, create value, and you get a dividend just for sitting there. That's exciting, and that's in like how they learn investing. So that's one. Number 2, there's been a bunch of like sketchiness, obviously. I mean, and the crowd can be a little crazy.
Yeah.
And like, you know, they're a little more like from the country club. This is a little, like I said, it's like inmates trying to take over the asylum. So that's another reason they're a little hesitant. And the volatility. The vol's come down, but then this sell-off from October through like March was pretty volatile. Like it reminded everybody why it's hot sauce. But there are plenty of things in Wall Street that are volatile. But those are the things, as you combine those things, it can make people nervous. And you add in like years and years of it being treated as contraband by the government. So there's a lot of banks and like they didn't want to touch it. But obviously that changed on a dime in the last election. So that took away that issue, but then the other ones still exist. So all of this is just going to take time. It is sort of, a lot of these firms have a ton of money and they're playing prevent defense. They do want more assets, but they also don't want to do anything stupid. And they've got a lot of lawyers. And so Bitcoin can feel a little risque. It can be like, we got a good thing going. We don't need it. But then when they see these other firms get in, like BlackRock and Morgan Stanley, they start to feel like, well, is there a risk not doing it? And that's sort of where we are now. And so that tipping point is happening, and that is unbelievable from where we were 3 years ago.
And you mentioned the last election as well. You were just on stage with Eric Trump just an hour ago yourself. What was the biggest takeaway you took from Eric Trump and his view on Bitcoin at the moment?
Yeah, Eric Trump was on one of my panels, and so was John Kudunis of Calamos. These people would be called suits. I would too, I guess. I get called suit and boomer all the time on Twitter.
What does that mean, by the way, for someone that doesn't know?
A suit just means you're from the business world, and maybe you're a little not as cool as like the original Bitcoin people.
And Bitcoiners,
yeah, you're not
thongs and everything walking around.
Your cypherpunk credentials aren't high. Maybe you're just looking to make a buck.
Yeah.
But the one thing that I took away, 2 things from Eric Trump that people underrate is 1, Bitcoin's real power as being censorship resistant isn't that useful in the US. Debasement hedge more useful. But in other countries, being able to buy a currency and move it around without like the dictator government worrying about it is a pretty powerful proposition. Eric Trump was talking about how like they could acutely identify with that because they were debanked completely. That's interesting to me. And I think that's one reason that even though there's you can say, well, that person's a suit, they may actually have more identification with this asset than you might think. You, the person who got into it earlier. So don't like judge people by don't be like judging a book by its cover. And the second thing was the user interface. He was talking about how the Trump hotels are like go crazy with like hospitality. And hospitality is something I think the Bitcoin itself needs to think about. How do you get people to use Bitcoin as a currency in a way that feels like, again, more easy to use, more hospitable, and less frictiony and difficult and unlike anything else you do. So that experience as being in the hospitality business and being debanked, I think have some application here that maybe people don't understand. So those were two things that I thought were interesting, and I didn't totally know until I started doing research for the panel.
So where do you see crypto ETF flows going for the rest of this year?
Look, it's bounced back. The flows are coming back. So year to date, the flows had come out. There had been like a 5 or 6 billion out. Well, it made up all that ground. So year to date, we're now positive. I think 2 or 3 billion inflows. Where do we end the year? I don't know. Price is important, but I would guess based on what I'm seeing, I wouldn't be surprised if it's like 15 to 30, somewhere in there, which would be, on par with the last couple of years, but kind of impressive, more impressive, given a 50% drawdown. Like a lot of times with ETFs, especially ones that are used on the top of your portfolio, like hot sauce, they tend to get more flows when everything's good. So for the flows to actually be even positive at all, let alone stack on each other and get to 10 or 15 billion, I think that's pretty strong. So I always say, like, it's easy to take in money when the sun is shining, but when it's rainy or rough out, what do you do? So even if they got close to 15 or 30 billion, that's very promising. And man, if the price starts to go up, let's say it goes up and hits 100 grand again, and if it hits 125, look out, because it will. A lot of people were like, this sell-off, I think for some people, they were like, oh yeah, this is why we don't like it. Yeah. And they even thought, there was even an article saying it might just go away now, like they always happen. They declare the death all the time. But if it comes back from this, I think some people who are like, God, man, if it just, it's just another, again, it sort of reminds me of the movie Rocky. There's like 18 Rockies.
Yeah.
People see it go down and they're like, the metaphor I use is like going into Rocky 8, and he's starting to get beat up, and you're like, oh, he's going to lose this time. Like, no, haven't you seen the other 7 Rockies? Like, so I think if this one comes back, it will help promote the fact that this asset's tough, and it comes back. But a lot of people haven't seen it come back lately from this big of a beatdown. Like, this is like Ivan Drago beatdown, 50%, because they just started paying attention when the ETFs came out. So I think if it comes back from this and it starts to get back up into the upper prices, I think it will win over more people, and that those flows could build from there. But from what I'm seeing, the firepower of these Wall Street firms is enough to really offset some of the people who might have gotten a little freaked out. So that's why I see a net number between like 15 and 30 billion to add on to, I think we're around 3 billion now.
And outside Bitcoin and Ether ETFs, what crypto ETFs are you most bullish on in the coming years?
I mean, I don't make price predictions, but those other cryptos remind me of small cap tech stocks in the 90s. They're all fighting over like, who's gonna like be the Web3, who's gonna replace the tech rails for this tech and for Wall Street. So they're like businesses. Bitcoin's special, it's a whole thing. They don't care as much about decentralization or security. They're businesses. So I just think a basket of those makes sense, because you see them, the winners and losers. It's hard to keep up. Even the insiders don't even know who's going to win and lose. So it's the crypto baskets that I think will have traction long term. In the meantime, yeah, Ether is obviously a standout. That was a huge hit. If you pretended Bitcoin never happened, the Ether ETF, ETHA, would be the fastest ETF ever to 10 billion. So it just was in the shadow of Bitcoin. It seemed like no big deal, but they grew pretty big. Solana and XRP had the 2 biggest launches last year of ETFs. But it was way less than Ether, which was way less than Bitcoin. So there's a law of diminishing returns as you get down. And then there was one called like, I want to say, I think Avalanche. It seemed like nobody cared. But like maybe Avalanche has a nice run, people go into it. So I think as we get into these other coins that are less known to people, they're going to have a shiny object moment where they just go wild. That'll get some looks. But overall, I think the big boomer advisor money, I don't think they'll look too much further than the top 3 or 4. This happened with precious metals. There was gold, silver, platinum, palladium, and then some people play oil. But then like nobody's playing like lean hogs or coffee. It's just too far. But when those things have a nice run, there are traders who start to trade them. But there are big money in a commodities basket ETF. So I think the baskets is where a lot of those coins will be bought for people who are like, yeah, I want to buy the energy and the enthusiasm and the business cases of all these, but I don't want to bet on one of these and be wrong. So they just put it in a basket and wait 20 years. And that's work for stocks and commodities for these investors, and that's probably how they'll do this.
Awesome. Thanks so much, Eric.
Yeah,
Appreciate
thank
your
you.
time.
Yep,
Cheers.
you got it.